much for coming today and for your patience as everyone gets settled. I see quite a few new faces. Just a show of hands, how many people this is their very first time here? This is awesome. So I'm Matt, I'm the community manager here. You probably noticed Staples is doing things a little differently now. Retail at its day. And we really are now transforming into a different company, different business model, where we really want to become the working and learning company, really helping support, especially here in Kelowna, people work, learn, and grow. So we've seen also that we've got some exciting things happening on this side of the wall as well. If anyone has any questions after today's session, I'd be more than happy to answer them. Before I do introduce our wonderful keynote this afternoon, I do want to just do a quick land acknowledgement. We are in the unceded traditional territories of the Okanagan Silex people. And it's with great honor that I can introduce my brother from another mother, or we're like brothers, but except he doesn't have the beard like I do.
Envious, very envious.
Absolutely fabulous speaker. You haven't heard Ken speak. He is just bang on, a wealth of knowledge. I'm going to leave it to Ken now for the next little bit that you'll have with him. And Ken, thank you so much for coming in today, and I wish everyone all the best. Big cheers. Okay.
All right. Well, as you noticed, I forgot to turn mine on mute, so if you could remember to turn yours on mute, that'd be awesome. Just a couple of quick things here. I have a mic that's on me because we're live on Facebook, and if anybody has any questions, I'll either have to just repeat the question, or if you guys could be so kind as to pass the mic around, just make sure that it's lit up and on green. Fair enough?
How can people find you live on Facebook right now?
If they were to go to Ken, find me on Facebook, it'd be Ken Chung.
Okay.
Yeah, and it should be live as we speak. Okay. Okay, I'm going to leave this here for a moment, and if we need to pass it around, that'd be great. For those of you who know me, great. Nice to see you again. For some of you who don't, fantastic. And even the ones that do know me may not know a lot about me that way. So we're just going to get started. This is a quick intro on me. It says to meet Ken. Some of the things that I threw together quickly was, when one learns to broaden their horizons, life becomes full of enrichment and abundance. Such an awakening inspires a desire to affect positive change in others. And I live by those simple principles, sharing my knowledge and empowering others. So I live life to the fullest and play full out in pretty much everything I do. Sometimes gets me in trouble, sometimes not. I'm a family guy in Kelowna. I'm going to skip through some of these pretty quick because the other presentation I wanted to share with you is longer as well. So, slide, come on in. We're live on Facebook, so wave. As you're going up the stairs, they can see you. Once you sit down, you're good. All right. So being a family guy in Kelowna, there's me, myself, my wife, Candace, and Kellen and Caden, our boys. We made Kelowna our home in 1998, had a little restaurant, done a few other things, and immersed ourselves into the community, which we love very much, year-round. My bio and history, if you will, is I've got over 30 years of business experience, understanding the needs to continually grow. Accolades of being inducted to the Hall of Fame in some of the companies I work for, as probably the ones I'm most proud of is the International Hall of Fame with the Wealth Intelligence Academy. That was for my efforts in real estate and the ability to do things I guess most people don't do. The claim to fame with that one was I purchased 120 houses in 90 days with none of my own money. After taking some of their courses, all these lights kind of went bing, bing, bing. I didn't know I could do that. And that's what I did. I approach every opportunity with an enthusiastic and creative direction. I like to take the opportunity to do something. So when Matt connected me with Melanie, his boss, and she asked if I would be interested in participating in the speaker spotlight for the next year, once a month, I said, sure, why not? And now here we are. So my investing experience is talking about the 90 days that I did 120 houses in 90 days. And over the lifetime of real estate stuff I've done is over 360 transactions, everything from rehabs, buy, rent, hold, assignments, condo conversions, trailer parks, commercial conversions. I was doing some mentoring and training since 2003, both in Canada and the US. I'm very passionate about helping others. It's one of the things I like to do no matter what industry it is. Mindset's mindset. And there's some testimonials from some people that I've worked with. It's nice to be able to make a difference, and it doesn't matter what industry you're coming from. I was also invited to participate with Jack Canfield and Brian Tracy. Actually, I should have brought a book. I apologize. But if anybody wants one, they give me their contact info. I'll make sure you get one. I did co-author this book back in 14, 15, yeah, I finished. My disclaimer, not financial planner, not an accountant, not a tax advisor, a lawyer, just a guy, okay? This is your business. If you're gonna do anything with the information I give you, make sure that you get the proper professional advice, okay? Because they are current. It's their profession, they'll stay current. Some of the stuff I know goes back a few years, some of the stuff I know goes back a lot longer. Some of the rules have changed, but most of them are pretty standard for the things I'll go over, okay? Now, that is that presentation. And here we go with this one. Slideshow. Okay. So asset protection and tax relief, okay? Wealth management strategies that the wealthy use to protect their money, move their money within their families, okay? It's not about how much you're gonna build, it's about how you're gonna protect what you build. A lot of people don't understand how vulnerable they really are. I have a lot of friends who have properties and businesses. There's a guy I know in Kelowna who is a partner in a business, and one of his other partners had a CRA problem, and they seized his assets. Part of his assets were his shares in that company, which they put up for sale, and the guy I know ended up with a new partner he did not want. Right? So that created a whole bunch of other challenges because of the structure they had. So again, protecting themselves through different strategies. So those are the things we're going to cover today. The ground rules. Shh. It's a learning friendly environment. Cell phones, pagers off or silent would be great. And be courteous. Audio visual recordings are devices are a no-no. This is Facebook Live, and I will have records of it. And if anybody has any questions after the fact and would like to know about some of the slides they see in the presentation, just ask me. Happy to share, doesn't matter. Networking during a break or at the end of the presentation, obviously we won't take a break, but at the end of the presentation, happy to do that, and feel free to do so for yourselves. The objectives, fundamental issues facing most real estate investors, small, medium, large business owners, and individual citizens protecting and passing on their assets. I hear about that all the time and how they do it, and how they do it without many implications, whether it's tax problems from estates and so on. People that get set up in businesses or divorces, all of these things, unfortunately, a lot of the questions come to me after the fact when I'd rather be able to help them ahead of time. What you may want to change or what you may want to fix might cost you more to do so afterwards. I'm in the middle of helping a fellow right now with his businesses that he created, and he went to a lawyer and said, should I have a trust? And he said, no, you don't need that yet. Now he's got a couple businesses underneath that company that are worth multi-millions of dollars and 5 more institutions that he just purchased. And for him to change all that now is a logistical nightmare. Forget about the cost of, I think it's gonna be roughly cost him upward $250,000 to do that. Where he had set it up right in the first place, he wouldn't have that problem right now. Because one thing you can do about a corporation, does anybody know what the benefit of the corporation is? You do? What?
Tax.
Well, partially. You spend your money pre-tax dollars in the company. But the liability, you can protect yourself from your business, but you can't protect your business from yourself. And not everybody understands what that means, but in today's world, everybody loves to sue everybody. Who here has children? Okay, so if your children are still of 18, you're still legally responsible whether they live with you or not. And if they had an accident and heaven forbid somebody passed on and they didn't have enough coverage and somebody was suing them for $10 million or whatever it is, they're coming after you, right? Because you are legally responsible for them until they're of age. And even then, they'll probably still try and come after you. So you may not have done anything directly to harm, put anybody in harm, but you could be liable for it. And if you've gone and built a business, a nice successful business, and one of these things happens to be worth $1 million, the business that you have, or the corporation because of the assets, and if somebody's coming after you for something, whether you did it or not, and you're still liable, guess what you own? The shares in that company. And guess what they're gonna own if they win? The shares in your company, right? And that can be a logistical nightmare for you, and or if it's only part of it, now you've got a partner you didn't want either. So this is why a lot of these questions come up. So knowledge is a tool, protection with a trust, why or why not, typical 3-tiered corporate structure, and how to restructure and the pros and cons of it. Some of the stuff we were just talking about. This is me, a brief overview. I don't have a little pointer or know how to use it, so I'm not going to. It's just one of my feature sheets and things I wanted to share. A little bit about you guys. Does anybody want to share who you are, where you're from, level of experience or understanding, current business or real estate holdings, and more importantly, what you might like to learn today so that I can tell you we're going to tap into that a little bit or a lot, and where, so we can try and answer whatever inquiries you might have. So why you may have come today. Okay? Anybody want to share or ask questions? Yeah.
Hello, my name's Kendra McFarland.
Oh, wait.
Oh.
Let's put you
Oh my
on the
goodness,
mic. We gotta
live.
yes, because I can't repeat all of that.
Hello, my name's Kendra McFarland. I'm from Manitoba, but I've been in Kelowna for 7-8 years now. My current business is called Vibrant Okanagan, and within that, we're concierge, cleaning, pet sitting, vacation rental management business. So it's kind of whatever flows. We have enough people on our team to accommodate.
Nice.
Interior decorating, real estate photography, staging. So it's a whole bunch of different things that has happened in about 2 years. Don't have any real estate yet, but I have a couple places I want to invest in for sure. And I'm here to learn where am I going,
Got it.
because it's the beginning and I don't know.
Okay, and you know, it's great because a lot of people don't ask the questions ahead of time and then they're stuck trying to figure out how to fix it afterwards.
Yeah.
So it's great to have some knowledge, and it might be overwhelming today if you haven't been in that realm, and that's okay. Just remember, you can always reach out and ask me, and I'm always happy to help you.
You are. Thank
Yeah.
you.
Anybody else? Pass the mic. Any questions? Yes, no? Nope. There we go.
Hello. My name is Callie, and I'm from Williams Lake originally, but I've been in Kelowna for...
The puddle.
Yep. I'm brand new to all of this, but my husband and I now own 2 properties, and we want to make sure that we're not doing anything stupid. So I'm hoping to avoid some issues.
All right. Fantastic.
Yeah.
Anybody else? She's advocating for me.
I see. Pierre Pichet. I'm with a company called IPMC, and my background is more sales and marketing, so I'm always looking to grow in those skills and areas. And I know Ken to be a phenomenal person on this topic on either vertical. So I'm here to learn to see how he goes about that, as there's always room for growth, and I'm here to support him as well. And that's me.
Fantastic.
Hi there, my name is Tom. I've been an owner of a company for the natural health field for over 20 some years. We're pivoting and engaging on a new platform, and want to make sure I set it up properly. We're dealing with healthy aging, and it's a very exciting week actually. So it's good to be here and learn a little more and learn from Ken what how to protect the assets we'll be acquiring going forward. Thank you, Ken.
Fantastic. Good. All right. Anybody else? Good? All right.
My name is Leighton Park. I am, I was going to say I'm from Grand Prairie, but I've been here 20-some years. So
You're from here.
I'm from here. I retired here after having a design-build construction company in northern Alberta. I've owned a number of companies. Current business, well, I'm retired, but I'm author. I've written 5 or 6 books. And I think I have 10 rental properties. What would I like to learn today? I just want to learn anything new that Ken could teach me.
Fantastic.
Okay.
Thank you. All right. And okay? We're good? All right. So thank you very much for sharing. Knowledge is great. Applied knowledge is better. So the challenge for a lot of people is that they're going to learn, they're going to remember some of this. The nice part is, as you'll see, I'm happy to give you my contact information afterwards. There's a lot of information to retain, and there's a lot of information that I probably won't even get to cover in this today, so I've kind of skipped through some things, and I may go fast in some of it, but that's because we're on a time crunch. This is normally a presentation done over a weekend, and so I'm going to try and condense it for you. But anything you do want to know past that, just feel free to connect with me. All right? I will do my best to cover everything you guys have asked about today. Nothing can save you from you, which is what we were talking about earlier. Nothing will replace the value of the insurance, but insurance alone isn't always sufficient. And that's a big part of the corporate structure that we were talking about with trusts. When you want to talk about trust, so for example, Callie, when you said you have a couple of properties, and Leighton, you have some rental properties. If you think about what they do for you as what you're trying to do for whether it's for your family or children or just for yourselves, but if you're thinking it's something you would have liked to pass on, wouldn't it be nice to know that you could have passed it on to your children without having any tax implication or having to sell it or pay the property transfer tax or those kinds of things? Having those structured inside a corporation will allow you to transfer ownership. There's still a gain there that has to be addressed. However, if it's done within a trust, that'll never have to happen, okay? And a trust should actually never hold anything of value. A trust should own the shares of something that has the value, okay? Because the trust is always taxed at the highest tax rate. So corporations can be taxed at the highest tax rate for passive income, which is what real estate is. And in that sense, you don't want that to make any money. So you do everything you can, and I'll show you how to make sure you're doing that legally, okay? So some assets have more risk to an inherent nature, liabilities from ownership, just simply. Transactions of moving the real estate, legal fees, lender costs, transfer taxes, and capital gains. How many people have a mortgage? Okay. And how many people know what their payout penalty would be if they close that mortgage? Okay, it's a lot, isn't it? Right? And it can be a lot worse if you really don't know and you're not expecting it. Some people think it's only a few $100. It can be a lot worse, right? So a lot of these fees come into play. So for example, Callie, you have children? No? Okay. Are you thinking about it?
Thought about it.
Okay. So let's say Callie had some children and she wanted to pass the house on, but didn't want to have control issues. Leighton, you said you have a family, right? You have children? Okay. And how many children do you have?
4 or 5.
4 or 5. Okay. So you purchased these for yourself for your personal benefit, but I'm sure that you want to leave it to your family or something when you pass, right?
Yeah.
If you were to just simply leave it as it is, they're going to have to deal with an estate, settling it, values, assessments, all those things when you pass. If you had it all under a corporate structure with a trust above, they just simply the trust stays alive, and you have a trustee that's in place, and now they can receive the benefits of it without actually having ownership of it. And ownership is kind of overrated. I say control everything and own nothing, because then you're not liable for anything, and nor can anybody take it from you if you don't own it technically. Okay, and there are ways around that, but structure is important. The odd person is going to have 1 or 2 houses, not to worry about, but when you're going to have multiple, or you want to protect it, even if it is only 1 house and you want to protect it. So, I have a friend of mine who I grew up with who I know is really not very responsible. Finds himself in all kinds of precarious situations, and married twice, divorced twice already. And if the assets that were left to him by his father had been in his name, they would have been long gone by now. So they were left inside of a trust, which has a trustee, which happened to be his mother, but that's okay. It was in beneficial interest of him, and she controlled it for him. So he could live in them, and he could be with somebody, he could be married, she could divorce, and she'll never get any of it because it's not for her, it's not owned by them. And he will always have that. So he was smart in setting it up that way. Some of these things I thought about earlier in life. Okay, so we get into why choose, the fundamental activities of interaction with the world. You have to think about your business. How much is it connecting with others? Kendra, you mentioned your business is a variety of these things, Jane of all trades in helping others do what they need done, right? And so you have a lot of interaction with people, and so your liabilities can be large, whether you think about them or not, as being large. If you start gaining assets, they become a liability for you in the sense that people can grab them from you if you're not protected, right? Because your personal actions are what they're going to come after you for in your business, right? And even if you were doing something for somebody and you had an accident and somebody sues you because so forth, right? It can put you in a jam and things that you may have taken time to build. We all worry today, the common thing I hear is that our children aren't going to be able to afford, well, my children are going to have a hard time buying a home, right? In the cost of housing in BC, unless they're going to go out to Nova Scotia or Manitoba or hit a prairie somewhere, are they going to be able to afford to buy something? It's going to be very difficult for them with the new rules, regulations, costs, expense, et cetera, unless they're making a ton of money themselves or inherit it. So you want to protect that no matter what you do. Wealth succession and ease of transfer of interest, I think we were covering some of that. One of the ways to do this, it depends on your resources to maintain. So like I said earlier, there's some costs to setting up corporations and maintaining them. You have to see, is it worth it? I'm going to tell you a short story about us is that, when we bought all those houses, I did put them in companies. The thing I didn't do was I didn't put it in under a trust. When I went to see a trust lawyer, he said, oh, you don't need this yet. He didn't know I was going to go buy 120 houses in 90 days, right? I didn't know I was going to do it. It just kind of happened. He says, the cost of maintaining that, it's another company. It's another expense. I've had taxes every year, filings every year. They can add up. But you know what? Had I done that, I would not have lost it all. Okay, so going from 20 million to -8 in a real short period of time, not a fun experience, and I wouldn't have had to do that had I put it under a trust. Okay. Your individual tax and legal circumstances and goals are very important. You may, for example, Kendra, you may end up being in a business now and have things under control, and things may change. I know Tom is in a business now, and if he has more partners or shareholders that come into the company, things can change. But when income comes in and you have revenue to deal with, you want to be able to pass that through. I'm going to say Leighton lives a different lifestyle than I do at the moment. I'm sure he does. Okay, and I know he's retired and he does what he wants to do, and he spends his money the way he wants to spend it. He may want to buy his cute little pup there a really fancy wagon or cart when she gets on, and so he can keep her coming with him. And do I want him to expense that to my company? No. Am I happy that he wants to do it? Absolutely. But I want to spend my money the way I want to spend it, and I'm sure he would. So if we're in partnership in a business, I want to make sure that he's able to spend his the way he wants and be taxed the way he wants. So there's a flow-through process to consider. And even though Tom has gone into his business with original partners, he's got other shareholders to deal with now, and that means other partners and liabilities. So as that can change, you don't know what to expect, and you want to be able to be free enough to have an exit strategy or be protected on your own. And you don't want to have your partner's liabilities or things they do affect you, okay? So it is important to make sure you pay attention to that, and lawyers will walk you through all that. And then there's sole ownership versus co-ownership we were just talking about, and succession or ease of passing things on, which we touched a little bit earlier. If I go past something that you really want to hear about, and I'm kind of skipping past it, just put up your hand and we'll make sure we cover it, okay?
So I went have to incorporate, because that's my next big move.
Yeah, if you're going to incorporate, you want to know what your purpose for doing it is and what you're looking to, your exit strategy could be. So if it's a business, for example, I have a friend of mine in Vancouver who has a plumbing business, and he wants to be able to franchise it all of a sudden. He's got this big idea, he wants to franchise and sell it all. Well, he's got everything tied up under that one main company now. It's going to be a nightmare for him to try and execute that. So he's best off to set it up under a new structure and put it under a trust and have all that stuff structured, and then franchise from the new one rather than the existing company he's in. So depending on your plans, if it's a simple, this is what the purpose is, and you don't see any big growth plans from it, then simple corporation will do probably what you want it to do. But if you think that you have other aspirations beyond that, or for future, then you may consider putting a trust in. I'm going to give you a little bit of information on a trust, which I haven't got in the presentations. But our trusts are done typically 2 ways. The most common is an individual trustee. So if I said, Kendra's a friend of mine, I know that she'll look out for the beneficiaries of the trust the way I'd want her to. Or I know she would do it the way I'd want it done. So I could trust that she's going to do that, she'll look after it all. A couple of challenges with that is if I set her up as the typical trustee, yes, she has control over everything, yes, she owns everything, I own nothing. All the beneficiaries could be my boys and my wife. However, if I needed to change that for some reason, let's just say that Kendra's married and her spouse is getting sued for something and they're going after all their assets. It becomes a logistical nightmare. Kendra might have to be filing bankruptcy. She can't do that and be a trustee. So if I had to change that, now I have a whole lot of paperwork and a whole lot of other things I need to consider to have everything removed from you and maybe moved over to Leighton. It is a paperwork nightmare. Had I structured that in a corporation that was set up as a trust, okay, guess what I have to do? Any ideas? Change of director, change of shareholders, couple penmanship, take them to the bank, change the banking from Kendra to Leighton for signing authorities, done. I don't have to assess anything, right? It's automatic, right? Simple paperwork, simple process, right? Do you see where the benefit to that might be? Corporation, trust, yes, there's expenses to it, but if you have aspirations of doing some things with it and making a lot of money or having assets of significance that you may want to pass on or even just protect, okay? I would always encourage doing it under a corporate trust and then a holding company under that. We'll get into that in a minute. And then underneath that holding company will be all your active businesses. You'll see the structure in a minute. Go ahead, yes.
How much we're talking about before able to qualify to set up a trust?
Okay, so the question is, just for those of you online, how much would we be talking about to value to set up a corporation on a trust? It really has nothing to do with value at the moment. It's what the value in the future can be, right? So the value or the cost of setting up a trust can be a few $1,000s, okay? And then you're, depending on your accountant or your ability to do your own taxes, you have filing fees and stuff to do every year. So that could be pretty minor, but worth doing if you think you're going to do some other stuff down the road, right? Just a few thousand to set up a trust, absolutely. Yeah, and there's a couple good trust lawyers in town that I could direct you to. I like the one, even though he told me not to do the trust in the beginning. I did go to him afterwards and have it set up, okay? Because for everything that I built in that time frame, it was going to cost me about $250,000 to switch everything out of my current corporate structure and into the new one underneath the trust. So I decided to liquidate all my properties and rebuild everything under the trust. And in doing so, a few things my world went upside down and I lost everything. But had I done it right in the beginning, I wouldn't have lost anything, right? It would have been very minimal, right? So does that answer your question? Okay, so, okay. Common business structures we were talking about, sole proprietorship. Does everybody understand these three? Is there anybody who wants clarity? No, we're good, okay. The differences are separate legal entity, a separate taxpayer. Does everybody know what that means? Okay. Anybody having questions on that? No? Okay. Sole or co-ownership, which we were talking about earlier, the setup costs. You can set up a company online, a typical company, for under $1,000. You can go to a lawyer, it'll probably cost you anywhere up to $2,000. Okay. It could be less depending on the lawyer you might know, but for the most part, it's usually $1,500 seems to be the average these days. And then ongoing obligations is just regular filings, that kind of thing. And then there's advantages and disadvantages to all the above, okay? Every one of them will have an advantage or disadvantage. And one of the biggest ones they talk about taxpayer is that a corporation, you can spend your money pre-tax dollars. So before you take an income out of it, you can expense everything through a company. But if all of a sudden you're expensing everything through your company, Callie, and now you decide that I'm your new partner, I don't want you expensing everything through the company anymore, right? I want you to expense it on your own That's why part of the structure is important, how you own your shares in that company. Okay? Sole proprietorship. Is there any real questions on sole proprietorship? Does everybody understand what that is? Okay. No questions? Okay. I'm happy. You email me and I'll send you this. I will, yeah, no problem. Sole proprietorship, pooling of assets, unlimited liability to the owner, but owner assets are subject to the risk of the business. Okay. Sole proprietorship advantages, easy to set up, cost of maintaining it, tax benefits, write-offs. How many people here have a JOB? They work somewhere. Okay. How many people here also know that having that JOB, you can still have your business off the side? Okay. And the benefit to having that business off the side if it loses money is what? Pardon me? Yeah. So if you have another business on the side, you actually get to get some of your taxes back that you paid in your JOB, especially if you're in the negative, which is okay for a couple of years before taxman gets upset with you. Some of the disadvantages of sole proprietorship. Then we've got partnerships, which we were talking about earlier, 2 or more individuals, view of profit, those kind of things. Then we've got partnerships and ownership, no separate legal entity between, okay, no separate taxpayer. And then liabilities, unlimited liability, which is part of the challenge. And then the types of partnerships. This one's actually kind of important. You can get into partnerships even in a corporation, get general partnership and limited partnerships, okay? I've got friends of mine who do development projects and things, and they will have limited partnerships and general partnerships. So in my world, that would mean that I'm going to take this building and I need some investor money. So I come to Leighton, and then I come to Kendra, and I come to Callie, and I say, hey guys, you want to invest into this? This is what we're doing. This is the expected rate of return. And then you guys aren't going to do any of it. You're just going to be partners financially. So you'd be a limited partnership. So the limited partnership means your liability is minimal. If you're part of the general, that's where your liabilities are. So again, for me, my ownership as a part of the general partner would be through a corporation, so I can protect that again, right? But again, it's still important for you to understand, especially if you ever enter into a project or a development that you want to participate in. Limited partners, no involvement. Okay, corporations, we already touched on that. Does everybody know what it means by fictional person? Yeah. Anybody have a question on that? No? Okay. And different from other structures, its own legal persona. You were mentioning earlier about the cost of setting up a trust or a corporation. One of the benefits of going to a lawyer and getting a corporation that they may have on the shelf, okay, is that the corporation on a shelf may have been around a long time, okay, and if there's history or length of it, it could help with financing and its own credit. Because everything that you do, the government wants, or not the government necessarily, but somebody wants you on the hook. So you might be a personal guarantor even though you have it through a corporation, which is still fine, okay? Trust. I think we've covered quite a bit about what the trust can do for you and the benefit of it. But the biggest part of it, when I think about it for my children, is if I'm going to have an extra house that I want Caden there to own, I don't really want him to own it, but I want him to have the benefit of it. So right now, if he was much younger, let's say I bought it when he was born, and then he's going to go to university, well, I hope he's going to go to university. What's a typical university education going to cost him in 20 years? $200,000? And if you had to pay tax on that before you had the $200,000, it's probably closer to $300,000. And then you're going to clear $200,000 of it if you're lucky. And then you're going to have to pay for that. So you got to make $300,000 to pay for that. But if I bought that one house for him when he was younger, and it was worth $300,000 then, by the time he's 18, 19, ready to go to university, now let's say I bought in a market that didn't appreciate at all. 15 to 18 years, that house is pretty much going to be paid for. Okay, I could borrow against that house, no tax. I can borrow against that house, pay for his university. Done, right? Guess who gets to pay for his university? My tenants, right? Now he's done university and he doesn't have any debt. That's great, right? Because it's paid for. But again, I don't know what his decision-making process might be at an early stage. So if I put that under a trust, he can have every beneficial ownership of that house. He can borrow against it with the approval of a trustee. He can live in it, or he can rent it and get the revenue from it. I don't personally care as long as it's for the beneficial interest of him and goes through the trustee. Okay? Now the benefit to that again is that nobody can take it from him. Because as a young guy and maybe entrepreneurial inclined, he might want to try a couple businesses and he might fail. Lots of people in business fail. It happens every day. Do I want them to be able to grab the house that I bought for him at an early age because I wanted it for his future? No. Do I want him to be able to use the benefit of that house maybe to get where he wants to go? Absolutely. Does he care if he really owns it as long as he gets the benefit of it? Probably not. Make sense?
Can he use it as well to get loans and such?
He would have to do it through the trustee.
Okay.
So if you were the trustee of the corporations and everything in the structure, you'd be responsible for getting that organized and getting it set up, and then being able to issue the money as you see fit. Because as a trustee, you control everything and own everything in beneficial interest. Now, is there a cost to having a trustee? Typically. In the beginning, when you were talking about the cost of setting things up, you'd probably have a trustee that was a friend of yours, right? Somebody who is not immediately related to you, okay? Because you want it at arm's length. But if, let's say you had a best friend and you said, I want you to be the trustee, there's really no value to this trust yet. There's no big revenue in the businesses or in the corporations it owns. It hasn't really done anything. But I will promise you this, as a best friend, that if you're my trustee and doing what needs to be done, as that grows or as there's money and as there's wealth accumulated in there, I'd be happy to take care of you as a trustee. There is some benefit to that and expenses because you can't actually be paid to do it, right? But you can have some benefits from it, right? And you're not going to put somebody in charge of all of your wealth or of all the things that you want to pass on without trust. Big part of trustee, right? Make sense? Okay. Mm-hmm. So typical trust is not a legal entity. A typical trust is just a piece of paper saying that you're a trustee. I'm going to put this down, waving. So for example, if I asked you to be my trustee, you could do that with just filling out the proper documentation. Remember when I said if Kendra was earlier, something happened to her world, the nightmare I'd have to change all that would be a pain in the butt. But if we had that structured as a corporation, as the corporation was structured as a trust, easy, as you were talking about, paperwork, transfer of shares, transfer of ownership and banking information, and you're done, right? We had a corporate trust structured, and I changed the trustee 3 times. Simple paperwork. So in my case, the trust was a legal entity, okay? Most trusts out there are not, okay? And again, you have to look at weighing the benefits and the cost of it, right? I would never do it personally again, and I would never have it done outside of a corporation. It would be a corporation. It would be the only way I would do it. Yeah, and it can be a personal trust. So you're thinking about doing that to hold all your assets? Yeah, do it under a company. You'll be much happier for doing it. Even if you don't build your business to any extreme wealth within the first 5 or 10 years, you will be thankful that you did it later. Okay.
Earlier, you
Oh,
mentioned
no.
the term.
Sorry. Oh, there we go.
I know my voice is shot. Earlier, you mentioned the term fictional person.
Yes.
Would you explain or describe what that is?
Sure. A fictional person is the company. Okay, so a company is a legal entity, and that's what we refer to as a fictional person. So a lot of people always get caught up on, geez, I got to put a name to this. You know how long? Okay, my first corporate structure that way, my holding company was fcubed.ca Investments Limited. Do you know how long I agonized over what I should call that? And then do you know how quickly I realized it didn't matter? because the corporation itself was the legal entity and it could operate as whatever. Didn't matter what its name was. Everything else after that was a number company. All right? And in every company, just so you know, all companies are not created equal that way. There are Canada corporations, there are interprovincial corporations. So if I had a company that was in BC and I wanted to do business in Alberta, I'd have to interprovincially register in both provinces. If I had a Canada Corp, it allows me the privilege of operating anywhere in Canada. Now, if I actually did business in that Canada Corp, I'd have to register in each individual province as well. The reason I bring that up is that if you're going to do a structure where you have a holding company, you'd want that to be a Canada Limited company. Also, below that, in an active business company, like for what I did, I had the three tiers. So I had the holding company, the active business company, which was like a property management company, and then I had a real estate company, and it was just a BC limited company. But it was a Canada limited company, because I own property across the country. I had provincial companies, so I had a bunch of properties in Manitoba, so I had Manitoba corporations, then in BC and in Alberta and in Saskatchewan, I had different companies within those provinces that were owned by a Canada company, okay? It was a lot less expensive for me to set up a Canada Corp and to maintain it, okay? But a benefit to owning a Canada company is it can own the shares in all those different provinces, even though it's really not conducting any business in those provinces. The flow through of cash can go there, right? And you never want to have cash in a company you have an asset in. Okay. Does that help answer your question? Fabulous. There's joint ventures. We won't get a lot into that. Three-tier investment structure is the holding company, property management, and real estate company, as we were talking about. Here's the example. The holding company, property management, and real estate company. Okay, not always, again, depending upon your business. The one thing that was not in here that should have been in here is what? Trust. The trust should have sat right there. Okay? Had I had the trust there, I wouldn't have lost all that. Right? So, it's very important to understand again what your purpose is. And unfortunately, in today's world, we hear more, like, we used to always hear out of the States, people will sue everybody for everything. And we're starting to hear more of that in Canada. Does it make sense? People now, lawyers will say, I'm going to sue everybody and let the court sort it out, right? And you get dragged into something and they tie up your assets. If you don't own anything, they can't tie it up. They can't touch it, right? Okay. So the holding company is a holding cash from ownership of the management property and property management company, allowing for income splitting, typical corporations. The holding company is where you want the money. So if you go back to the holding company, this company here is a real estate company. It held assets, but it never made any money. It was really bad at operating. Had all kinds of expenses it was willing to pay. But guess who it paid it to? This company invoiced this company for fees. And this company is a really expensive property management company. And even though these companies, you know, you may have bought the house and the mortgage was $1,000 and your income might have been $1,300 or $1,400, but man, that $300 or $400 grace you had every month is gone because this one just bled you dry. I don't know why you pay a company that much money, but you did, right? So there's no income in this company. Why would there be, it's important that there's no income in this company. Correct. Passive holding companies that own passive income, they are taxed at the highest tax rate possible. Okay? So when people hear about 18, 20% corporate tax, it isn't in this company, it's in this company. Right? So this company here, if money flows through to this company, it's not income. Right? If it's paid its tax on here, but it's share transferring money up into here, money can sit in here all it likes and not be taxed on it because it wasn't income, right? Now, if you didn't have a trust up here and you own the shares in this company, is that a good thing or a bad thing? It's a bad thing, because if somebody was to go after what you own, It's the shares in this company. Where's all your money? Right here, right? Because this is an active business company, you can keep your money in here and do some stuff in here. It's important, right? But again, this is active business taxed at the lowest tax rate in a corporation. So important to have. Now, if you have a trust up here and you have some partners in real estate, which is if you do a lot of business, it doesn't matter whether you're franchising or having multiple locations or multiple partners in business in transactions, you're not going to want to spend, they're not going to want you to spend the money freely like you will. So if I had, and we were talking about joint ventures earlier, if I had a company over here, this one would be okay for me to own. This would be Ken's consulting company over here. And when I need to go buy something or I want to spend something that my partners probably wouldn't want me to, I can invoice money out and invoice it over to my active business company that's owned by Ken. Because that company over here, I can spend my money the way I want to spend it, right? So I'm going to invoice my share, my portion, when I need to buy something into this company. Okay? And I don't really care because this company is never going to hold an asset. It's never going to hold anything of value. It's just for me to spend my money pre-tax dollars. Because do I want to pay personal rate of income tax? No. Okay? Actually brings up a really good point. In a trust, I'm sorry, what's your name? Kim, right? Kim. Let's say you had 5 children. I don't know, do you? 2. Okay. Let's say you had 5. And they're all different ages. And they're all different stages in their life. You know, say they're all 2 years apart. Okay, well, there's a 10-year span. If you had it set up in a corporation where there are beneficiaries, okay, and all of a sudden number one child is, you know, they're married, they want to buy a house. They're going to have kids of their own. Okay, well, wait a minute. If you issued them a payment from the trust, okay, a dividend, if they are the same dividend or same class of share, okay, that all of the children have, but they need $100,000. But child number 2 and 3, they have really good jobs. They maybe make $200,000 a year. If you give them that $100,000, they're going to be taxed at the highest rate. You don't want to do that to them, right? You may want to make sure that they get their equal share, but you don't want to make it an unburdened tax problem. So what you're going to do at that point is have everybody that's a beneficiary would be a different class of share. Okay? So if you had to issue money for them, for that, you can issue to them without having to issue anybody anything else and unduly burden them with a tax problem. Okay? Because your other one might be coming out of university as a dentist and want to open up his own practice. Well, he might need $250,000 out of the trust to do that. And that would be a really undue tax burden against everybody else. Not really fair to them. Even though the money's there and they're welcome to it and whatever, you have no problem with it, you don't want to inflict that kind of situation upon the rest of them. So it's very important to set your structure up in a trust properly. And you can have things like you've got 2 children, and do they have children? No, but they probably will someday, maybe, or you hope, right? And if they do, they might have children. So you can label children, unborn children, and generational children in different classes of shares in a trust. So even though they might not even exist as an entity or as an embryo or as a person or even a thought at this point, there's something to protect for them in a trust. Okay? So that's really important to know. Yes? Okay. This way. Okay. So the holding company, allow for second mortgages given by a third party, allow for cash flow between property management companies, that kind of thing. This was a big question. People didn't know how I did what I did. How did I acquire 120 houses in 90 days with none of my own money? Okay, a lot of it was through the financial world. I put things in corporations, and what happened in the corporation is that the banks wanted guarantors. Okay, you bet. Thanks, guys. Okay. The banks wanted guarantors on this. Now, when guarantors come in play, you have to have income or the ability to qualify. But I had 20 companies, and each one of them I was putting a mortgage under. And when I did that, the banks wanted guarantors. they cared if I qualified for that. They said, well, what else do you own? Well, I don't own those other companies. They're under trust, right? So no problem. I have no liability to that on paper. I'm not on title with any of these properties. I'm just guaranteeing a mortgage for this company. So that's how I ended up with 72 mortgages with CIBC inside of 90 days. Yeah. A little more to it than that, but you get the general idea. Okay, property management company allows money to flow through. This is part of the 3-tier structure. And the real estate company, where separate ownership from the management isolates individuals or groups. Again, you could have partners in those kinds of things, and co-ownership with third parties. That happens a lot in business, whether you're in Tom's business in nutrition and health, or whether you're in Kendra's as active business. You could, all of a sudden, you'd be really good at dog sitting, and you all of a sudden create a really good business off the side of that, and you partner up with somebody who wants to take it to another level. But it's your business, and together now you own this other entity. Well, you wouldn't want that entity to be within your one company. You'd want to be able to carve that off, right? And if you carve that off into another company, and then you decide to franchise that and go big with this thing nationwide, internationally, whatever, well, all of a sudden, if I came to you and said, hey, I'll give you $1 million for your portion of that business, or for that business, would you sell it? Time of life? Sure, why not? But if it's tied up with a whole bunch of other things in that company, it's going to be a disaster for you financially to figure out. And then I might look at it and go, yeah, I don't want to deal with all that, right? So part of the structure. So this is how, we're near the end here, guys, but does anybody know what time it is? 1 o'clock? Oh, good, so I'm working on time here. Okay, so this is where your cash flow sits. Take a picture of that one. That's what, it's really important. Okay, so these here, we have shareholders' loans, we have dividends that can pay into, et cetera, and you rotate it through. I'm going to tell you to take a picture of it. I'm going to tell you you're going to want to talk to your accountant about it, and then you talk to your lawyer about it if it's something you want to structure. Because whether it's real estate or any other asset, you want to be able to do it. I also had this structured so that my holdco held another company over here that owned all my vehicles. And all my vehicles were in through that company. And that company was a leasing company who leased it to the appropriate company so that I could expense it without having to be ownership of it.
And that's legal.
Yes, completely. So that company now, if I wanted to, could show financial history and do its own things. Make sense? Okay. Now, I'm going to tell you that one of the key things I learned from my accountant was not how much he was going to save me, right? He said, it isn't, his quote was, it's not how much I'm going to cost you, it's how much I'm going to save you, right? And it's really important. I tell you, I paid my accountant thousands and thousands and thousands of dollars a year when I had all those companies. I think my highest bill was about $39,000, okay, for 1 year. Happy to pay that. The amount of money he saved me in taxes over the years with my companies was worth it all day long. And you know what? He lives in my community. He respends his money in the community. I'm happy with that. Pay the professionals what they're worth. Don't scrimp on those because you get what you pay for. Okay? Okay. Business structure summary. All the structures have unique characteristics. You got to know them and use them to your benefit. Okay? If you want to know, okay, so I'll give you another example. I have a friend of mine who's an accountant by trade. He's actually a forensic accountant. If Staples wanted to sell off this business division to somebody, and they said it's worth X amount, and here's all the revenues, and here's all the books, he's going to go in there and decipher it and figure out, is there something missing? Are these really the numbers? He's going to forensically tear it apart, but don't ask him to do your taxes. He says, I got no idea. He takes his to an accountant to get his taxes done, right? Because it's not what he specializes in. So you might have a friend who's a real estate lawyer and does a lot of real estate transactions that way. He maybe not be the right person to set up a corporate structure for you. Make sense? Or she. So make sure that the person or the professional that you're getting advice from has experience in the field that you want to go into, okay? If you're looking at businesses and things you might want to build, make sure they understand what those businesses are. Make sure they have experience in that area so they can guide you appropriately, okay? guess what? You made it. You survived. Now we can go have lunch. Okay? Now's the time where, unfortunately, live, we're not going to be able to do it live because I'm not moderating the Facebook page, but questions and answers. So if you guys have questions, now's a great time. Oh, wait. Where's that mic? There's got to be one or two. Who wants to start?
I have a question.
All right.
So in your trust company,
Yep.
You would have a separate individual. So I have a spouse and me. In the companies that we have, can we have each individual companies under that one trust company?
Okay, so just to make sure I'm clear.
So
Go ahead.
Tom has his business.
Yep.
Deb has her company.
Yep.
You have them both linked into the same trust, or would you do a separate one?
None
Or
of
in
your
a holding.
businesses would end up under that trust if you want to own it.
Okay.
Okay, so the company that Tom owns,
Mhm.
Tom owns. If it was in a trust, the trust would own it, not Tom. Tom may run it, Tom may operate it, but not if he's a beneficiary of the trust.
Right. So does
Tom's
it,
consulting company can do a lot of things on behalf of it
right.
and get paid and invoice appropriately, but Tom can't directly control it.
Right. So if as a couple you wanted to have your businesses in trust for your children,
Okay?
would it make sense to have a trust company or a
Yep.
trustee
Yep.
and then have those other
Build those businesses underneath the
underneath
trust?
them?
Absolutely.
Okay.
I'll give you an example. A friend of mine owns a fastening company, and he says, I built this business and none of my kids want it. It's a multi-million-dollar business, and they want nothing to do with it. Until one of them got a divorce and now runs the company, okay? Because it was something that she could grab a hold of and take ownership of and operate. Now, it was not set up under a trust, which as it was, because for now she just basically has a job running the company. Because if he was to transfer ownership, there's going to be capital gains and things that he has to deal with, right? So for him to have structured it properly, if he had put it under a trust, and she could still work there, she'd still only have a job there, but she'd have beneficial interest of any of the profits or proceeds that business had, controlled by a trustee, right? So to answer your question in full, if you're going to operate businesses or build a business underneath it for your kids, great, that's fantastic. Make sure you do it under that structure, right? For the businesses you may choose to do, like Kendra does a lot of things on the side here, right? I call her Jane of all trades, right? When somebody says, well, what's Kendra do? She's a Jane of all trades. She does this, and this. One of those businesses might really take off. And right now she does it as a sole proprietor. If she decided to do that as a corporation, she's now going to incur corporate costs, but there's a plan. She wouldn't do it if there wasn't a plan. And if you took a portion of that concierge service and portioned it off over here, I would do that, but I would do it under a trust. So you don't have ownership. And I do it under a trust, a holding company, and then the active company. And the reason for that, people say, well, why don't you just put it under the trust? It's really rather simple, is that the trust is taxed at the highest tax rate. If she was sold it directly to Leighton, because Leighton found interest in her company, she did a really good job building it up. It makes a couple $1 million a year. Well, let me buy that from you. And she says, yeah, okay, I'll sell it. Capitalist, I'll sell anything for the right number, right? Well, guess what? Her trust would have a direct tax implication because a trust is taxed at the highest rate. If she had it under the holding company, that would be a share transfer up into the holding company, and that holding company will be able to take on that income, and it's not considered taxed that way. So again, talk to your accountant about it, but you'd want to have a holding company to hold any of the shares in any of those things. Trust never directly owns anything except for the interest in the holding company. Okay? Yeah. Anybody else?
Yeah, I got a question.
Oh, hold on. Gotta get the mic down to you. Okay.
So instead of, you mentioned zero basing maybe one box, let's just go to the diagram and keep it simple, one box to save taxes on that and pay taxes on the other income earning box. Could you not, instead of zero basing it, sort of balance each so that you don't get above a certain tax level?
Well, no, because you're talking corporations, and corporations are going to pay tax at the lowest corporate tax rate anyway, right?
Okay.
So there's
So it's not tiered like an individual tax rate?
no, and that's why people will do it, because you can have $200,000 income or $50,000 income, it's going to be taxed at 18%,
Right.
right? Where if you did it on a personal level and you had $200,000 income, you know, anything over that 65,000 or whatever the threshold is today is going to be taxed at the highest rate.
It changes every year, but yeah.
Yeah, it changes when they feel like it. That's why it's a benefit. So to your other point about the other company, there's no point in having income in that company because it will be taxed at the highest rate regardless. It's passive income. Anything that's passive income is taxed higher.
I gotta get going. Good job, brother.
Fabulous.
It's a pleasure, man.
Thank you.
Okay, my question's really simple. What exactly do you do?
I do as little as possible and love every minute of it.
Okay, but you said you're not a lawyer. You're
not.
not selling insurance or accounting.
No.
So
What do I do for a
you're
living?
you're a consultant?
I do consulting work on the side with respect to developments, projects, structures. I consult. Yeah, I mean, my day job, I work at Shaw, right?
Okay.
Yeah, so since I went through everything, I told you earlier, I went from 20 million to -8, right? I had to go get a JOB, right? It was a rough thing to do, but I did. So back to working, and you know, going through the things we went through, and a lot of people, I touched a bit on it last Tuesday when I saw you guys about some of the things I'd done. In short, for those that have met me, I did all of this, I did within a couple of years and built this little real estate empire, if you will. And then I had a property manager embezzle $500,000 from me, and it started a downward spiral. I lost almost everything through that, cleared out with a couple $1 million, went into land development in the Okanagan in 2007, and we know what happened in 2008. And I got caught up in that, and it was over, right? So unfortunately, with partners I had, I couldn't get out of it, and I lost everything. And I was on the hook because I personally guaranteed for a $15 million loan, and they foreclosed, sold it for a song to a backhanded deal that shouldn't have happened. Nonetheless, I was on the hook for $6.5 million, plus the other debt I incurred, which was $2 million. I went bankrupt for $8.5 million. So I had to start over. But had I had the corporate trust set up in the beginning in the first place, none of that would have ever happened, right? So people say, well, you know, why don't you charge for what you do that way? You know what? Information is great. I want to be able to help others succeed. There's a lot of information that I couldn't put in today's presentation because it's just too much, all right? But it gives you an idea. There are things to pay attention to, and if you're going to do it, at least think about a little bit more of it so that you're a little bit better prepared. And yes, always help. And simple things, simple questions, always happy to help. If somebody wanted to consult with me to do something, I'm happy to do that too. So thank you. Yeah. Nope. One question? Yep.
It's about what you were just saying there. So you lost a lot of things, but you didn't lose your house, even though that wasn't mixed in
Very good
that?
question. Do you want to know why I didn't lose the house?
Yes.
Because I listened to a smart person in the very beginning that said that whoever out of my wife or I who is going to be the main person on paper doing the investing, okay, that main person owns nothing. So I took the house and I put it in my wife's name.
Okay.
And it's the only reason I still have a roof over my head today.
She's a smart woman.
Yes. So, yep, go ahead. Oh, down here.
Completely different topic, but any tips or tricks about franchising related to this?
Oh, goodness. Within a corporate structure? That's actually a really good question. If you're going to franchise, you want to be able to structure it properly. A lot of people think just have my company, set it up as a franchisee company, and then have franchises underneath it. Actually not the best thing to do, right? If you have, I'll give you an example. My plumber friend, he has a company right now, and if he was to do just that and create a bunch of franchises underneath it, okay, they're really not his companies unless he partnered up with some of them, okay? But the challenge for him is that he's also come up with a great idea of being able to take FaceTime kind of idea, or Facebook Live, video chat, and he helped me with a furnace problem over the holidays when in the middle of the night when nobody else was going to answer my call. and did it over FaceTime, I was able to get my furnace back on. Okay, so now he wants to create that as a whole business thing. Well, if all he did was do it under that one company, and then all of a sudden, you know, Leighton says, that's a brilliant idea. I want to take that and run that thing nationally. I don't need to franchise that portion of it. For him to carve that out would be a pain if he didn't set it up under its own company underneath the holding company, right? Yeah. So good question. And to answer your other question that way, everybody says, you know, I try to tell everybody, I didn't lose everything, right? I still have my wife, my kids, my house, the bank owns my house, but we still have a roof over our heads. And I'm very fortunate because I know a lot of people who went through what I've, you know, kinds of things I've done, and they don't have their wife, and they don't have their kids, and they don't have their house, right? So it's important to know. I will tell you probably the best lesson, even though I lost some very expensive things, and the beautiful house that we built across the street. I built $1 million home across the street from the one we live in. And people say, well, doesn't it bother you to see that every day? You know, it was quite something, and I was very proud of what I built, customized everything. But you know, at the end of the day, it's just stuff. It really means nothing. And when I talk about names for companies, they mean nothing. They're really there as entities to produce what you need for you and your family, and or for the purpose in general you want it for. So use that, make it work for you, right? Any other questions? No? Thanks very much for coming out today, guys. I'm going to wrap that up. So I really appreciate it, and some great questions. So anything you need, I don't think I have that in the presentation. Come grab me. I'll give you one of my cards if you don't have my contact information, and we'll be able to keep in touch that way. Okay? Yes. Thanks, guys. All right. Touch that. Okay, now how do I stop from being live?